Good day, everyone. I'm Sam Raposo, admin for the Options Wheel Strategy Facebook group. And today we have Gianmarco for our weekly review from the Option Trading Club. Welcome, Gianmarco.
Hey Sam, how are you?
Good, thanks. So let's start with our regular, I guess we could say now, with the indexes. You want to start showing us the review of the indexes for this week?
Yep, absolutely. Here we start with the SPY as usual, and quite an interesting week, I would say.
Again.
Again, really, if you remember last weekend, we discussed about this support in the 428, and you see what happened. It has been tasted basically for 3 days in a row, up and down, but never closed under this level. And then magically on Thursday, we had this big gap up with not so much of a continuation so far, so we are still in a choppy market. But of course, that is good that at least we are out from the support zone, and we'll see what is going to happen next week. I suspect we are going probably to fill the gap on the way down and maybe a little more consolidation, but at least we are pretty far away now from this crucial level of support. And basically the same things also with the triple Q in the high technology stocks. And again, this big gap up, and then today much more weakness going into the close of the week. And the VIX is reflecting all of these. Again, we stayed in the first part of the week above the 20 level. That is sort of the limit between the very low volatility. And when we go above 20, we start to go in a higher volatility environment. And after this beginning of the week, we had yesterday and today, we were going after the 20 level. So we are back in a more normal and lower volatility environment. And now let's go to the stocks and the position I had for this week. I'm an option seller. All of these are cash secure puts that I sell. And not too much of a problem. HPQ, that was an easy ride. You see, I got $40 per contract in 9 days, 60% analyzer return, so a very, very smooth trade. Then this other one, way more interesting, that was on Kweb, the Chinese internet. I opened these more than 2 months ago, and I have to roll, I think, 3 times to get out of these. And actually, I followed these until the close today. And at the end of the day, that I have to say has been a difficult trade. But when you are an option seller, you have the privilege to be in a position of come out also from a difficult situation like this, keep rolling and adjusting. And I collected, you see here, quite a lot of premium, yes. $3.95 per contract. And at the end of the day, even struggling, I came out with a 40% analyzed return. Again, I think that is pretty outstanding for a trade that goes against you.
I have a few questions here. That's the beauty about the options. So I'm assuming this one expired wordless finally, right? At 59. So that's why you were telling me you were following it until the end.
I had a couple of positions. To be honest, in a situation like this, it's much safer to buy back the position before the close. Oh, I was even thinking about rolling again if that was going to close below the strike. But at the end, in the last few minutes of the market, there was not so much volume, so I prefer to let it expire. Again, like an expiry position like this, you still have the risk of late assignments in the after hours. But to be honest, I don't care too much. If I end up being assigned, this is secured by cash, and I could even sell at the opening on Tuesday or sell a covered call against it. For me, the main crucial point that I'm profitable at the moment because I collect so much premium and I am at the strike price. So really, if I'm assigned, it's not a big deal anyway. And the same situation is for MU. I traded this for 3 weeks in a row in different position. And this week was the after earnings, and the stock pulled back again at the 70 level that I already traded for 3 times. And I collected $83 per contract. Very short-term trade. You see here 108 analyzed return. That is pretty outstanding. And again, I could have closed these before the close today. I could have rolled to keep collecting more premium, but I decided to let it expire. And if for any reason in the after hour I am assigned, I'm very comfortable owning this stock and play the other side of the wheel with covered call. So there is no problem at all.
So sorry, Gianmarco, this was a 4-day trade, this one?
Yeah, yeah.
You had it, and that's pretty good. 4-day trade, $83 per contract.
Yeah, yeah. This is why the analyzed return is so high, because basically I enter here on Tuesday when I saw this spike down, breaking the support level. Actually, I entered with a pretty high delta, but then because I really love this level of support, has been tested recently, is a major level of support that came into action after this major breakout. And the stock went up, and then started to pull back and was finally tested a few times here. And during the last few weeks, I already did 3 different trades at the same strike. And we were back again here at the beginning of the week, and the premium was good, volatility was good. I love the stock, so I decided to get in.
So that was,
and again,
were you in the money when you entered that close? Was that
no, I was slightly out of the money still. So I was around here at some point, and I went in the money the day after. But again, if, for example, I was in this situation today, is just keep rolling and collecting more premium and creating a cushion of security. So yeah, really no problem. In this sort of scenario, I'm comfortable more or less with any sort of events. Going down, being at the strike, going up is a win-win-win situation, really.
Well, just in this scenario, since you're comfortable with that $70 support, if you would have had to roll, let's say the stock would have finished around 69.50, for example. Would you roll at $70, or you would have rolled a little bit down? In this scenario,
No.
you would keep this.
It changed from case to case, but in this scenario, if I'm very close to the strike, I like to roll at the strike, at the money, because the amount of premium is the most you can get. So you keep building this margin of safety. And no, I really start to roll down when the position moves a lot against me. But when I'm very close to the strike, I'm happy to keep the strike where it is, really.
Great info. Thanks.
All right, no problem. And the last of the week in this weekly cycle was the 3-time leverage on the TQQQ. And again, a very, very quick trade that I played on a low delta because it's a leverage ETF, so I'm a little bit more careful. So despite of the high volatility, the ROI is not that great. I mean, it's still amazing at 54% in 8 days, and I was able to collect $130 per contract. And again, despite the weakness in the market, I enter around here, and even if the market kept going down, the strike was never really at risk. So another very, very easy maintenance trade. And so that was all for what I had this week, and a couple of stocks that I will be looking for the next one. This is actually is an Irish company, is STX Seagate, is in the hardware space, in the computer. And I like the general uptrend. I like the fundamental of this stock. And now after arriving, going above the 100 level earlier this year in the summer, now is retracing and going to test the 80 level. And this 80 level looks interesting. Maybe the stock will keep going lower a little bit. What is interesting here are earnings. Again, you may like or not to play earnings. Generally speaking, I prefer to stay away from earnings, but from time to time, I like to take advantage of the volatility, of the inflated volatility during earnings, and taking advantage of the IV crash just after earnings. So I'm not going to play this straight away. I want to see what is going to happen. But when we come close to earning, depends on the price action, I may try to play these for a quick play, probably, because volatility is already very high. The only downside with these stocks is that volume is not that great, so liquidity is so and so. The bid-ask spread tend to be a little wider. It's still decent, still doable for small position. There is a chance that as we go through earnings, that volume is going to pick up a little bit. But we'll see. This is going to be in my watch list, in my radar for the next week. I would say the next couple of weeks, because earnings are coming on the 24th, I think.
If I can add, if I could add to what you were saying, some personal experience on stocks like that. I love stocks like those as well. But the only thing is, let's say earnings are not not good, or they're not well received by the market. There's a drop. The difficulty that I had is then rolling down becomes more difficult, like you said, because there's not a lot of liquidity on those stocks, earnings and all that stuff. So that could be.
Yeah, you are totally, completely right. This is why I play earnings just on occasion, and only if there is a company that I really like, and also the chart setup is something I really like. I don't really play earnings in a blind. So, for example, here what I like is this level has already been tested. And again, I want to see how this price action is going to develop in the next few days, because, for example, I don't like this solid red candle. We'll see, but as a potential to be a good earning play, we'll see. And I'm not sure I'm going to play it, but it's going to be in my watch list. And to finish off, I have again X, US Steel Corporation, that I had already in the watch list last week, and actually I played this today because here the liquidity is very high. There is a lot of volume also on the weeklies, and there was a good level of IV, and this 20 level is pretty interesting. And I decide to enter today towards the close. So we'll see how it's going to develop. And I like, because in this situation, because there is so much volume also on the weeklies, I was able to play for the 22nd of October, because we tend to concentrate a lot of our position on the monthly, but because I really like to diversify by time, I always like to have a few positions every week in expiring. So this kind of stock with high volume, they make life much easier to add position on the weeklies. And yeah, I think that's all for this week.
Great. So congratulations on a great week. For those who want to follow all the trades from Gianmarco, there's if you want to follow the live trades, you could join the option trading club. And I strongly recommend that you also subscribe to Gianmarco's newsletter. Lots of great information there. All the trades that he's done in the past are all going to be showing there. So great information. And if you want to know what he's going to do with STX and X, well, subscribe to the Option Trading Club, and you'll have all the information. I hope you enjoyed this video, everyone. Thank you for joining. Feel free to join our Facebook group as well, the Option Wheel Strategy, where we have a lot of people that are knowledgeable, like Gianmarco, who are sharing their ideas, helping you guys out with some trades. Great community, and feel free to join. On that note, thank you, everybody. Happy trading, and thank you, Gianmarco, for your weekly review.
Thank you, Sam. Bye.
Bye-bye.